Hey guys, we're gonna start. I want to thank all of you for signing up, first of all. And I know how difficult it is to take that step when thinking about buying your first place. So I want to congratulate you for taking this step to learn. And this is what it's all about today. It's about learning and asking questions. My name is Ravi Bindi. I'm a realtor with Royal LePage. I've been in real estate for about 25 years now. I've seen a market like this a few times where the market goes down, and there's certain things a buyer should do in this type of a market. Now, like I said, I've been in real estate industry for 25 years. I've helped numerous people buy and sell their homes. And personally, I invest into real estate myself as well. So I'm also always in the market buying and selling. Now, today, my goal is to give you a lot of education and give you, equip you with knowledge so you can actually make educated choices, right? And as you can see on the screen right now, these are the things we're going to cover. So I want you to understand how to read market stats so you can use this information to gain financially. I want you to understand the buying process, because if you don't understand the buying process, what happens is you're in the dark. You don't know what's the next step, what's happening next. So it's really important for a buyer to understand what are the things coming next. So we're going to cover that. We're going to cover the buying cost. I know I called a whole bunch of you guys, and some of the things you mentioned is one of the most important things was you want to understand the buying costs. What are costs involved when buying a place? So I'll be covering the buying cost as well. Today I have a good friend and a mortgage advisor who's been around for a long time. And I'll be doing kind of a Q&A with Shane McKay here, who happens to be with TD Bank. And what we'll do is we will do Q&A with him. I'll do questions and answers with him. And then we'll open up the forum so you can ask him questions about mortgages, all right? And at the end, we'll give you our information. You'll get an email from us with both our information, and feel free to call us if you have any questions after this. And please, this is a forum where we encourage participation. So please do ask questions in the chat if you have any questions, or just unmute yourself and ask me any questions as I go along. All right. So once again, thanks for tuning in. And what I will be doing is, number one, I want to start by covering stats. So just give me 1 second. Let me pull this up. Oh, there we go. So let me just go into. So I want to cover stats with you. And what I've done is I'll be doing it in a different format, and this format works better for me when I'm explaining it, because I always write things down, right? So here's the monthly stats, and this stats is for Surrey. There's a company called SnapStats that provides us with this information. They organize stats in a way where it's more readable. So you can see what's happening month after month after month. Now that we have your contact info, you will get these stats every month. So you can see exactly what the market is doing, despite what what the news is saying. Okay. So what I have done is I'll cover, there's 6 parts to the stats. So what I want to do is cover the header here. So the header shows here that this stats is for Surrey. It's for October 2022. And the first part, what they do is there's 6 parts to this. So the first part is community. So what they do is they show you total number of sales that happen, total number of inventory that came and in the month of October on top of existing inventory. And then total number of sales that happen with the new inventory that came in plus the existing inventory. And they give you a sales ratio. Just so you know, this right here, which is at about 19%, used to be at about 80 to 90% at the peak of the market. So as things were coming in, they were selling. Now here, what you can do is by looking at these stats, you can see, if you're looking at Surrey, you can see the community and you can see there's Bear Creek, Boulevard Heights, Bridgeview, Cedar Hills, East Newton, Fleetwood, Fraser Heights, all of these communities within Surrey. So if you're new to Canada and you wanted to see what's in US, what are the communities in Port Moody, Maple Ridge, these are good. This is a good place to go in and check and reference like what areas there are. And if you look, this stats is for condos and townhomes. And for example, Bridgeview doesn't have many condos and townhomes, so it'll show nothing, right? Fraser Heights, same thing. If you look at Port Cal, same thing, like Royal Heights, same thing. But if you look at Central City, which is Wally, you'll see there were 308 listings that came in and only 50 sold, right? So here it shows you total number of inventory, but that came in and how many sold and the sales stats, sales ratio. But here it shows you how much inventory came in that respective neighborhood, in that respective community. So you can look at what the sales ratio are for respective communities. Now, part 2, which is this right here, okay? Just give me 1 second. Part 2, basically what they do is they take the total number of inventory, same thing from here, but what they do is arrange it in terms of price band. So every month when I'm looking at the price band and I'm looking at how many listings are between 300 to 400, 400 to 500, I'm always checking, is this inventory, is our inventory raising in this price band, which means prices are coming down. Are there less and less inventory in this price band? Because when the market was at the peak, there were not much inventory in this price band, right? But now there is. So it's really important to look at these numbers, okay? And just give me 1 sec. And if you say that, okay, I want to spend only up to between 400 to 600, then you can see how much inventory came in these area in this price band, how many sold, and what the sales ratio is, right? And you can determine that what kind of a market it is. And if you look at here, anything below 10% is a buyer's market, a true buyer's market. Anything that is between 11 and 20% is a balanced market, and anything above 21% is a seller's market. We were at the peak, we were at the strongest seller's market that you can ever imagine, right? So right now, if you look at 22%, 28%, we're still at seller's market in some of these areas, but not as strong, all right? So that you just have to understand. Same thing here. If you look at the sales ratio in your price range, you can see like between 1 million to 1.25, townhomes are not selling, right? So you have the power to negotiate with these people when these listings come up. Now, what they do also here, the third part, is they arrange the same stats, number of inventory that came in, number of listings that sold, but they range it in terms of number of bedrooms, like studios to 1 bedroom, 2 bedroom, 3 bedroom, 4 bedroom. So studio to 1 bedroom, 211 listings, 41 sold. 2 bedrooms, 283 listings, 68 sold, right? And the sales ratio right there. 3 bedrooms, 243 listings, 37 sold. So these are 3 and 4 are your townhomes. 2 generally are mostly your condos. Okay. And it tells you what the respective sales ratios are. So for townhomes, you can see the sales ratios are getting lower and lower month by month. And we're almost approaching a true buyer's market soon. So to keep an eye on this, right? The fourth part shows you month over month variance. So how did September perform against October? And then it shows you the variance. The inventory dropped, the sales dropped, the prices dropped 3%. Price per square foot, which we'll talk about more, which dropped quite a bit, right? People always ask if a listing is listed at, let's say, 800,000, how much should I offer? Well, right here, it shows you generally listings are selling for 98% of asking price or 96% of asking price. So it has dropped 2%. And then how many days on the market things stay? So even the inventory that's selling right now, out of 838, the 159 that sold were priced sharp. They were priced really well. And one has to learn how to determine what a good market value is, right? And once you learn this, there's no way you'll overpay ever, okay? Now, the next part right here, let me just move this up a bit, shows you the market summary, okay? So everything I talked about on the top kind of summarizes it right there. And the best part that I want to observe every month, and I want you guys to observe every month, is the 13-month trend, okay? So the black line here represents the average sale price and how it fluctuated every month. Inventory, the red line, shows you how much supply came into the market, the new supply that came in. And then the blue line shows you total number of sales. So it's sold listings. And if you look at this line, in October of 2021, average prices were at 558. We had 483 listings that came in, but we were selling 389. That's a lot of sales. And that was at the peak of the market. And look at what happened in November. 415 listings came in. We sold 398 listings, right? Here it shows you that 248 listings came in, but we sold 370 listings. So keep in mind, 248 listings are the new listings that came in that month on top of the carryover that happened from the month of November into December. So there were listings that carried over, okay? So that's what it shows. So, but this shows that we had less inventory come in and more sold. And when this happens, when there's a gap between supply and demand, if the supply is low and the demand is high, guess what happens to the price? It starts moving up. And then look at what happened here. Like in the month of March, we had Bank of Canada kind of indicate that we're going to raise rates multiple times. The war happened, inflation numbers came out. And then we saw that the market, the demand started dropping. So the demand dropped and the supply kept on rising. And guess what happens? When the supply goes up, demand goes low. Guess what happens to the price the following month? It starts coming down, right? So this is basically basic supply and demand rule. And as a investor, as a person who's buying their first home for personal use, it is an investment still, you must look at this every month and see what the market is doing. Because you can read news and it'll scare you because the news sells fear. And if you follow the facts, you can't go wrong. Right now, the facts show that the inventory kept on rising, and it kind of flattened. And at this point, sellers realize, okay, we are out of the seller's market. Market is shifting, and we're going to take our listings off, and less listings come in. So right now here it shows that the inventory started dropping, but so is the demand. Look at the demand compared to last year. Like, look at these numbers, right? The demand has dropped drastically. And now what you want to look at, what I'm looking for is if the supply is dropping and the demand is dropping, at what point will the supply start, the demand start going up? If this happens, it's not good for you as a buyer, because now it shows that demand is shifting up. And this will only happen when Bank of Canada, number one, says we're not raising any more rates. And number two, if the rates start coming down, right? And that's when this will start to happen, where the demand will shift up. But until then, I don't see demand up. We're still going to be either flat or even lower. And the key number to watch also is supply. Is the supply depleting? Is it going down even more? And then what is happening with the supply? If the supply keeps on rising and demand keeps on going down, we know that the prices will come down, right? So this is what you want to look at. If you look at the supply and the demand line, there's a big gap in between these two lines. And look at the average prices, they're coming down. Every month they're coming down. And one of the things when people look at this, they say, hey, we're getting a lot of buyers saying, do you know what, we'll wait until prices come down. And that's not the best strategy to apply when you're looking to buy a place. The best strategy to apply is to start looking for deals, because we found deals that were amazing price per square foot. And in a seller's market, what people do is they go in and then they make offers at a crazy price, like 100,000, 200,000 over asking. In this market, at least you can negotiate price, right? And when you look at the peak prices and compare it to today's price, and I'll show you how to do that in a bit, you will learn right away what a good deal is. And if you buy something at this point where the market is slowing down before this starts happening, you are at a good position, right? Because you picked up a property at a lower price, and now, yes, you are paying a higher interest rate, 100%. You're paying much higher interest rate, but that's the cost of doing business in this kind of a market, because the rates will not stay this high for a long period of time. They will come down. And when they do come down, that's when you negotiate with your bank and say, look, I want the lower rate. And now you get to enjoy both the lower price and the lower rate, because when the rates go up, guess what happens? The market picks up again, right? So here, let me just take on some questions. Do you have these stats available? We do have these stats available. So there's a question on the chat. Do we have these stats for Abbotsford and Mission? We have these stats across the Lower Mainland for Greater Vancouver, for Metro Vancouver, and for Fraser Valley as well. So Abbotsford and Mission would be in there, yes. 10%. I see 10% is the buyer's market. What is the percentage cap for? So what is the percentage cap for the seller's market? So a seller's market is 21% and up. So if the sales ratio show that it's 21% and up, it's a seller's market. So if the sales ratio show 80%, 90%, that's a hot seller's market. But still, it's closer towards a balanced market, so you don't have to worry too much. The best thing you can do right now is find good deals, and I'll show you how to evaluate that in a bit. Now, before I move on from here, do you guys have any questions? Unmute yourself and please go ahead and ask. Yeah.
Hi, Ravi. I have a question.
Yes.
So I was looking at the inventory and sales, and how are this data taken? Like for the inventory, are they taking everything as of October, and for sales, whatever was sold during October out of that 838?
So great question. Great question. So the 838 listings that came in were new listings. The new listings for the resale market, right? So keep in mind, this does not include pre-sales. Pre-sales are calculated totally differently. Not many people, there's no track of pre-sales, what happens in the pre-sale industry. This is strictly for resale. And 838 listings is for townhomes, condos in Surrey, Langley, Mission, Abbotsford, and all Fraser Valley, right? So this is the total listings in actually, no, this is total listings for Surrey right now. Yes.
Yeah.
Yeah. So keep in mind, and then there would be inventory that would have carried over.
Okay, I see. Yeah. Thank you.
All right. Any other questions, guys? I see a question on the chat. With increasing rates, if my budget is 700,000, is it good to go for a pre-sale or a resale? So honestly, Ramsey, it totally depends on your individual needs. What we do is we sit down with you and we go over our buyer consultation meeting. And in there, we do a need analysis. We ask you about 20, 30 questions to understand your needs better. And then based on our knowledge, we give you options. And now you decide which option to pick. We'll suggest options and we'll show you pros and cons for each option. And then you may say, well, okay, this option works better for me. I'll want to go with this option. And that's how you would pick, right?
Sure.
Does that answer your question?
Yeah.
Okay. Thank you. Mia has a question. Does the foreign buyer tax applicable to Surrey for someone to buy while they're on permit? So if you have your BCPMP number, if you have the file number, then the foreign buyer tax would not apply, right? If we have people who have bought pre-sales, and at the time you buy a pre-sale, you're not registering that property on the title. It's when you complete, that's when it becomes a hold on. That's when it becomes it registers on the title, and you have to get a mortgage and you have to pay applicable taxes at that time. So for example, if you buy a pre-sale now that completes in 2025, 2026, you get to take advantage of today's price and you can complete down the road and not pay foreign buyer tax. And hopefully in between that time, you get your PR, right? So hold on. Yeah, so that's how it is. Looking for a recession ahead.
That's true. There's the 2-year caps. Right?
Yeah. So with foreign buyer tax,
It's not the foreign buyers tax. They're actually
foreign buyers will not be able to buy. Yeah.
starting in January.
Yes.
Yes.
And for people with work permit, if you have to pay that foreign buyer tax, there is a way to apply later on to get your money back. So we have to see what kind of rules there will be in January when they introduce the foreign buyer restrictions, and we'll just have to evaluate at that point, right? Now, Pooja has a question. Looking at recession ahead, since the interest rates are climbing till next year, would it be good time to buy a new home? So this is the dilemma a lot of people are in. And here's what I'll show you, okay? I want to show you this. So you can buy in a market where the market is going up or the market is going down, and then whatever goes down will come back up. So in an inclining market, what happens is there's multiple offers, you have to bid over asking. In a declining market, there's no such thing. And as a buyer, you can actually take advantage of the declining market because there's not many buyers out there, and you happen to be one of them who wants to buy. And you can actually now negotiate, you can put subjects on your offer, and possibly get an awesome deal in a declining market. But in an inclining market, you cannot do that because everyone's starting to jump in at this point. Now, I wish I knew how to time this because I don't. I don't know when the bottom's going to hit. And nobody does. Nobody does. And what will happen is when the bottom hits, what will happen is you will start hearing news like Bank of Canada will say, okay, we're not raising any more rates. You will hear news that fixed rates are all of a sudden coming down. And that's when the bottom's going to hit and the market's going to reverse. A lot of people will start jumping in because now they're seeing, oh, the rates are coming down. Now I should buy, right? What they don't realize is thousands of buyers are thinking this way now, and they're jumping into the market because now there's consumer confidence. Right now, if you look at Bank of Canada's language, they are keeping everyone in uncertainty. And this is what they do. And they're saying that they're going to increase rates next year too. So the question is, when should you buy? Should you buy in a inclining market or a declining market? I would pick declining market, right? Because here I can negotiate price, I can negotiate my terms, and possibly get a good deal. The only concern is, yes, I'm paying more. And you know what? Sometimes you have to equate that as the cost of doing business, because for a fact, you will pay higher interest rates for a year and a half, right? Until we see inflation numbers come down. And then once the rates start coming down, you can go back to your bank and renegotiate your mortgage terms and possibly lock in at that time at whatever, 3% or 2.5%, whatever they may offer, right? And for those kind of questions, I have Shane here with me who will answer mortgage questions because he's the expert here, all right, on mortgages. Now, I hope this answers your question, right? The next question is the first-time home buyer gets incentive for properties under 500,000. So yes, there are first-time buyer incentives, and there will be a few more coming. There's few grants you guys have that you can take advantage of, right? If you're buying anything under 500,000, that is used or brand new, you will not pay property transfer tax. And anything over 500,000, yes, there's a sliding scale where up to 550. If you buy anything at 550, you pay the full property transfer tax. And I'll show you when I do the calculations. All right. Questions? Perfect. Mitesh, let me know what the question is about.
Hey, Ravi.
Hi.
Thanks for the great info.
Yeah,
I have a
yeah.
question on the area research. I moved from Toronto, and Vancouver, BC, West Coast is a pretty new, area for me. It's not even like 6 months I'm here. So is there any portal or public domain like the stats what you showed? Is there a place where I can go and look like what areas I should be looking to buy a home?
100.
Keeping in mind, they've got 2 kids, so wanting to make sure that their schoolings and the area perfectly fits based on my requirement.
Okay, so that's a great question, and even for anyone who has lived here for a while, you guys don't know the areas either. So there's a few ways to research the areas, and I'll show you how to do that. All right, and any mortgage questions will be passed on to my friend here, Shane. But let me show you a website where you can go and do some amazing research. And just give me 1 second. Let me just pull this on. There you go. Oh, there it is. Okay, perfect. So let me just share my screen with you. Can you guys can see my screen, right? The first website I would say is you should be researching everything in realtor.ca, okay? So check in realtor.ca for listings, because we have our own system as realtors. We have a system called Paragon where we go in, and I'll show you the back end of our system and how many filters we have. It's amazing. But I'll show you, for example, I'll type in the address here, and I'll show you this. So for example, I'm just typing in an address. Now, if I want to look at this address, I want to know more about the neighborhood, I would go into here and I can check all the scores, like how close is it to groceries, how friendly it is for transportation, park, and all of that, restaurants and everything, how quiet it is, right? So whatever you value, you would pick accordingly. Now, the other part I love about this is the stats. Who's living here, right? Like if this is important to you, like I love stats. So you can see what kind of demographic lives here. What is the population growth projection till like 2028? You can see that. You can see the education level, the family mix, right? Language, household income. There's so much you can go into details and learn about that neighborhood. The second website, this is for parents who are looking for good schools. So if I say, okay, I want to be in a certain area, let's say I determined that, okay, I want to be in Surrey, but I want to buy a place in Central City. So now what I can do is I can say that school, Surrey, BC. And I can see their report card rating right here, right? So zoom in. So I can see the schools in Surrey, and I can see how they are. I can see their ratings, and I can pick and choose where I want to take my kids. One of the things I would suggest is if you're looking at schools, maybe even contact them, talk to the principal, go to the school, and see what their vision is in terms of like improving these scores and and how do they communicate with you. You'll know right away if this is the kind of school you want to send your kid to. But you can see there's like this one right here, 8 out of 10, right? So what I find is a lot of people, when they pick location, they pick location based on school and proximity to work. And if you are picking a location and you have to travel to, let's say, downtown, you want something that is close to transit, like SkyTrain, but then now you also want something that is near a good school. And when you apply for catchments, like if let's say you are living in Central City, but now you want to drop off your kid to Walnut Grove School, you can apply for out of catchment, do an out of catchment application and kind of say, hey, I want my kid to come to this school. And then the trouble is to always pick and drop the child back and forth. Or you find a place around this school and then you arrange your transportation in terms of going back and forth to work on your place, on yourself, right? So I hope that answers your question, Hitesh.
Yeah, it does. Thank you. Thank you very much.
Yeah. So these are the two websites you want to look at and check out, right? We have some more questions on the chat. Variable fixed rate, I would totally recommend go variable unless there's good rates coming out for a year or 6 months. That's what you want to go with, or a couple of years. Then you want to go fix. But I will let Shane, who's the expert, talk about mortgage. Can a first-time buyer get a 2-year variable when first entering the market? Would like to know, as then we can renegotiate which price starts to drop. The price starts to drop. So that's a question for Shane as well. So he'll answer these questions for you guys relating to mortgages at that time. Okay. I'm just going to go over the things that I have prepared for you guys. What are some of the factors to look for to buy something in an area which would appreciate in value than most other Greater Vancouver? So great question, Devin. So I'll go over that with you as well. For investment purposes, what's better, townhome or? Okay, so I'll be covering these questions, not to worry. So in terms of appreciation, what you want to do is, I'll go back to this. If I look at stats for any areas, for example, okay, and if I look at the population projection, where is it? The population projection. And if it's inclining, guess what? The demand, it's showing me the demand's always going to be there, right? This is where the Stats Canada is saying people are going to move. And this happens to be right by King George SkyTrain. So understanding the dynamics of Lower Mainland and how the SkyTrain connects us, and the new SkyTrain that's coming in from Langley City into Surrey, Central City, Surrey, and with all the growth that's happening in Surrey, we know that city of Surrey is going to grow and the prices are going to grow, because when you buy the same thing in Vancouver or like Burnaby Metrotown area, you see that the prices are so much higher, right? And I feel that Surrey has still so much room to grow. It's changing year by year. I moved into Surrey in 1990. When King George SkyTrain area was all jungle, there were no buildings there. Now there's about 5-6 buildings there, right? So understanding the dynamics of what city of Surrey is trying to do with the area, that area is going to boom. So anything close to SkyTrain will do extremely well. So when you're looking at buying your first home, yes, you want to look at location, you want to look at schools, but you also want to look at this, the population growth. When I look at population growth in some areas like Maple Ridge or Mission, there might be some that are declining, right? So you just want to stay away from those kind of areas. And based on population, if the demand is there and people are moving in, there's always going to be positive appreciation. Okay. And then the second question was for investment purposes, what's better, townhome or homes, apartments? So in terms of investment, if you look at the rates, when the rates were at 3%, 2.5 to 3%, we saw certain segments move up and did really well. So you have to look at pre-COVID, when the rates were about 3%, 2.78, 3%. And what was doing well at that time? And townhomes were doing well. So you have to look at the prices, average prices back then. And then you have to look at what the average prices are doing now. Are they lower than what 2019 was selling? And if not, can you pick something up and negotiate something in this market at a lower rate? And if you can, that's where you're going to do well, because what will happen is when the rates go down, the demand for townhomes are going to return, and those prices are going to start moving up as well, right? Currently, anything that is priced between 500,000 and $1 million in this kind of a market does extremely well. So that price range will do well, but as soon as the rates start coming down, that's when we'll see the prices pick up. And then you apply the strategy to maybe move up at that time, because you've gained so much and now you have that momentum going to your next property, right? So old versus new, if you have to buy old or new, I would look at price per square foot. I would look at, there's many factors you have to look at. You have to look at, number one, how is a building being maintained, right? So when you're thinking of buying an old townhome against a new townhome, you have to look at price per square foot, what things are selling for, what are what is the strata doing with the old townhomes while it's being it's getting older and older, right? And if the strata documents show that there's a lot of repairs that they have done, they've changed the roof, they've done maintenance, that's a good place to invest your money. But I would say that it totally depends. Like, you have to look at many factors. Okay. Any suggestions of websites where we can check previous sales? We have access to that. The thing is, in US, people have Zillow. There is no such thing here. So you would have to contact us and we can kind of sit with you, Mia, and kind of go over the numbers, all right? If you're a Canadian citizen and don't have much money, my credit score is low. So Shane will talk about that. I would recommend to call Shane about any mortgage questions you have, and he will answer them for you. One of the things I would do is start improving the credit score, getting credit, buying stuff on it and paying it right off, and showing that you are good with credit. So that's one of the things you want to do. Okay. Old property, new property, North Van. So, okay, so another question is, should I get old property in, for example, New West, Minister, or a newer property in North Delta? Now, keep in mind in 1990s, in US, there were a lot of buildings where we had leaky condos. So we call 1990s kind of a leaky condo era, where builders were building these condos with the California kind of specs, not understanding that we get quite a bit of rain. And due to that, we had a lot of leaks that went into the structure and kind of ruined the structure. And a lot of these buildings had to redo the outside siding, which cost a lot of money. And in US, there's a lot of buildings that have done it. There's some buildings that have done it partially. So when you're buying something old, you must read through a lot of documents, strata documents. And when I work with buyers, I order a whole bunch of strata documents. I read through them and I show you right away if a building is good or not. Because if a building is not good, I will tell you personally not to buy it. Even if we make an offer and you like the place and I read something that is not good, I will let you know and I will tell you not to buy, right? So you want to make sure that you read through the strata docs. And one way to figure things out is right away, if you look at the water deductible in their strata insurance, if the water deductible is at like 500,000, 700,000, that means that building had quite a bit of problems. And that's why the insurance company is saying that your deductible has gone high. And if the deductible is like 100,000, 50,000, that's a sign of a good building. If it's an older building, that's one way to gauge, okay? Leaky condo applies to townhomes as well. Yes, yes, it does. Okay, so I gotta move on. I'll answer more questions as they come, okay? And I'll get Shane to answer all these mortgage questions you guys have. So the next one, the next part. The cost, okay? So the next part is the cost. So let me just pull that up and I'll go over the cost with you. I just created this Excel sheet, which I'm now proud of. So here we go. So I hope you can see this Google Sheet that I have. So what I've done is I've kind of formulated this, and I can give this to you guys for your references. Just don't edit the certain parts, which I'll highlight. Now here it shows you if you're buying a $800,000 property and putting 10% down, because you're putting less than 20% down, you have to pay a fee. So this is two parts. Closing cost is when you're buying a property and at completion, you have to pay a certain amount, okay? Now, because you're putting 10% down only, it works out to this much right here. But if you were to, let's say, put down 5%, then your CMHC fee goes higher. But according to the mortgage laws now, you cannot put down 5% of 800,000. You have to put down 5% of 500,000, which is 25 grand, and 10% on the remaining balance up to $1 million. So in this case, you would put 25,000 down, and from 500 to 800, which is 300,000, you would have to put another 10%, so 30,000 down. So actually, this will be 55,000, and this is how much your CMHC fee is going to be. And because you are crossing that mark of property transfer tax, your property transfer tax will be 14,000, right? GST, it does not apply because this is an existing property. Otherwise, it's 5%, and it would be in this column. Whenever you buy a place, you have to hire a lawyer as a buyer or a notary public to close on your deal. And the lawyer will charge you $899 or $1,000 or $1,200. But then there's other fees involved: title registration, ordering of documents, title insurance. So when you add all these things up, it normally works out to about $2,000. Okay. Now, the next cost is inspection. So when you buy a property, you must get an inspection done. You want an inspector to walk through your unit, but also walk through that parkade, the first level of the parkade, because if there's cracks and leaks happening, that's a costly repair. And you just want to make sure that they look at that, they look at the boiler room, they read through the depreciation report to give you a fair assessment of is the building good or not, right? And be careful of who you hire, because not every property inspector is good. In my 25 years, I've come across many who will spend like half an hour, 45 minutes and walk away and just give you a really poor report. And there's a few name brand inspectors who do an awesome job of like doing a detailed inspection of your property and giving you way more value. So we always recommend those kind of inspectors, right? Moving costs, if you're moving yourself, you don't have to worry about this. You can hire a U-Haul and probably do it for cheaper. Mortgage appraisal. So when you are buying a property, we do an assessment of the property to make sure that you're not paying too much. But the bank, because they're lending you money, they want to do an appraisal to make sure that you're not paying too much. So they will send an appraiser and they will say, well, you are buying a $800,000 property. We deem that this property is worth only $750,000. So we're not going to lend you that extra $50,000, which means your down payment plus that $50,000 is what you have to put down at that time, right? So you have to make sure that when you put subject to financing, that within that time frame, your appraisal comes through, and you want to make sure of that. Okay. There's some mortgage brokers who will charge fees. If you deal with like a reputable bank, they don't charge anything, right? And your down payment. So the reason I've put down payment here is if you are coming up with, let's say, you're going to put down $55,000, the minimum. You also have to come up with this column right here. You have to come up with this much cash. You have to have this much cash in hand for closing costs. So these are all the costs involved when buying. The good thing is the insurance part can be added to your mortgage. So what I've done here is I've calculated how much the mortgage amount will be, purchase price plus minus the down payment plus CMHC fee. So if I change this to, let's say 80,000, 160,000, you pay no CMHC fee right there, right? So you pay nothing. But as soon as you go under 20%, let's say 120,000, that cost comes back up. So just keep that in mind. And sometimes that's the cost of doing business. Sometimes you will find a deal where you can't say no. And this is, yes, adding to your cost, but you know what? It's cost of doing business because you found that good deal that you got. You may be able to sell in the upswing market. You may be able to sell that for more and kind of walk away with a profit where you can upgrade to that town. A lot of people, what I'm finding are what they're doing is because they're not qualifying for townhomes or that house, they're buying something a little bit lower, but for a good deal. And it's based on price per square foot, which I'm about to show you. Okay. Now, the second part is your monthly payments. So you really have to be careful of how much your monthly costs will be. So hold on. So for a mortgage of 702, just gonna quickly calculate this. Now I want to show you what I'm doing. So this is the TD calculator that I'm using. This is brilliant because I can kind of compare. So 702, 500, let's say. I want to go with maybe a 1-year close and then calculate. So this is the payment, right? If I want to do this same thing with a 5-year variable, this is my monthly payment. So it comes down a little bit. Now I want to take this number. So 4,300. I want to put that into my Excel sheet so you can see where they go, right there, perfect. So you can see how much my payments will be in terms of monthly payments. So so it'll be sum of all of this costs, right? Do it the old school way.
Remove the dollar.
There we go. Right? So this is my total cost. You have to take into account strata fees. You have to take into account property taxes calculated monthly, your insurance costs calculated monthly, right? Then your hydro, then your Hellas, and then your Fortis. When you're renting, you're paying this anyways. But the new cost that is involved are strata fees, property taxes, and your insurance. So you have to be aware of this. Okay. For household income. Okay, so that's a mortgage question. Yes, Shane will answer it. 5% down. Okay. So that's how this will work. So, okay, so there is another question. If I purchase a 270,000 property, 5% down, I have a mortgage, I do I still pay my own down payment? Sorry, Roger, you may have to unmute and kind of explain this a little bit when Shane comes up. So do ask this question when Shane comes up, all right? Any questions on this cost on this sheet? Please unmute yourself and just ask any questions you may have.
Ravi, I have a question. You said
Yes.
that GST doesn't apply on resales. So,
No.
does it mean that if I go for pre-sale, I have to pay GST?
Correct. So
Okay.
that will be, so in this case, if this was a new property, you would have to pay this much GST plus this much property transfer tax. When you go with resale, you avoid paying this, right? GST.
Yeah,
Yeah.
right.
And this is where we come in with expertise. Like we would advise you, okay, does the pre-sale make sense? Does the resale make sense based on your needs, specific needs? We would help you. Like my job is not to push you into buying anything. I don't want to do any of that. The philosophy we have always applied is I'm here to educate and guide you. And now I'll give you information and you decide which way is the way to go. Like you decide, do you want new? Do you want old? Like, and we bounce off ideas back and forth. Like I give you suggestions, you say, hey, Ravi, I don't want to do this, I want to do that. And then I'll say, okay, the pros and cons for doing that is A, B, and C. And now you decide if you want to go. And then I'll tell you, if I were you, I would do this or I would not do this, right? So it's always good to bounce ideas back and forth. Another question I get asked a lot is, as a buyer, do I have to pay you anything? The way it works in Canada, well, in BC, is a buyer never pays anything out of their pocket to the realtor. The listing agent signs an agreement with the seller and says, look, this is how much we'll charge. And we will give a percentage of that fee to a realtor who works with the buyer. And that's how we get paid, just so you know. So to use my expertise, you don't have to come up with cash in hand, right? So just so we are clear. But
Thank you, Ravi.
yeah, no worries. Good questions.
Hey Ravi, this is Roger.
Hi, Roger. Yes.
I just want to ask if I get qualified for a mortgage and I was qualified for $270,000, something like that, and do I still have to pay for anything for for the realtor?
No,
Not if you're a buyer.
if you're a buyer, how much down payment do you have? How much?
Let's say if I have like because for 270,000 it's 5%, right? But if you're asking me about the down payment, maybe I'll have like 25,000.
Let's say 20 grand.
Yeah.
These are your costs right here.
I
Right.
see. Okay.
So property transfer tax.
So do
So this
yeah,
won't
so-
apply to you. This won't apply to you because you're a first-time buyer. You won't pay this, right?
I see.
Um,
But if
You
so
won't pay
so yeah.
GST.
Oh, I see. So there's nothing else to pay for, is it?
No.
Just that one. Okay.
So
Right.
whatever the cost here is, what I would do is this cost minus 3,400 is what you want to do, right? Is what
Oh.
you would have to pay, have cash in hand. So another about 3,500 on top of your 20 grand, you should prepare for and have
Right.
in hand. Because a lot of people, what they say is, I want to pay 20 grand, but they don't account for all these closing costs. And that's where they get in trouble. So we would
Right.
make sure that like we would talk about these numbers and make sure that you're okay, right?
I see. Okay. Thank you, Ravi.
All right. Yeah. Good question, man. Will I share this Excel sheet? 100%. I'll give it to you guys. I have all your emails, so I'll send it to you by email. Not a problem. I still have to do a couple of updates. I could not figure a couple of things out, which was not good. So I'll update this. And as I update this, you'll get updated sheet anyways, because you'll be sharing it. I'll be sharing it with you. Okay. So not to worry, you'll get this. So that's the questions about the cost involved. Okay. So the next part I want to share with you is the buying process. And that's right here. Okay. So let me just see if I can view this. Okay, there we go. So today so the way it works is today we meet, and then the next step we recommend is you always talk to a mortgage rep to find out what you qualify for. And once we know what you qualify for, we can start looking at properties at that price point and start shopping around, right? And what we do is together, we work together to look at properties. You'll look at realtor.ca. I'll look at on my system. I will look for properties that are not even on MLS, that are off MLS, because I'm on like 7 different chats with 200-300 realtors on each chat. And a lot of properties come in these forums. And what happens is they sell from that forum, because there might be some listings where you've called and they've said, no, it already sold. And that's the reason why it sells, right? So we have access to these kind of forums where we can tap into properties that you may never see. And we see that. So what we do is, you don't have to book any tours. We book everything for you. You just send us information about what you want to see. And we create a WhatsApp chat between us and my assistant, and we set the tour for you. So let's say we go on a tour, and because we assess your needs and you say, Ravi, I like property number 3 out of the 10 properties. Let's make an offer, right? So what does the word offer mean? So an offer consists of price, dates, and subjects, okay? So price, dates, and subjects. Price, self-explanatory. If somebody wants is asking for 900,000, we may go and say, well, how about 850? Would you take 850? And then we agree on price, and we, let's say, agree at 875. Now we have to negotiate dates. So in terms of dates, let's say we say we want to complete at the end of March. They may say, no, we want to complete at the end of December. So now we negotiate dates, and we say, well, okay, I'll give you the dates, but give me the price. So why don't we drop the price down to 860, and you can have December dates, right? And now that we have negotiated these two things, in terms of dates, there's 3 types of dates. Dates terminology you have to remember. Number 1 is completion date. Completion date is when legally you become the owner on paper. And completion date cannot be a stat holiday or a weekend. It has to be a working day, right? A business day. And on that day, the lawyer will register the title under your name and give that money that you are borrowing from your bank to the seller. Possession date happens like a day or 2 after, where you get the keys. And the next date, which is called adjustment date, is where the lawyers will adjust the taxes, the strata fees, because if you're completing halfway through the year, why would the seller pay for your property taxes halfway through the year? So that is adjusted, and that's exactly what it sounds like. It's adjustment of property taxes, strata fees, okay? And what you're telling the seller is, Mr. Seller, I'll buy your property at that price, negotiated price, this date, subject to my financing coming through, subject to the inspection being satisfactory, subject to me reading the property disclosure statement. This property disclosure statement is a questionnaire a seller must fill out truthfully. And if they lie, they can be in trouble legally. And you have until 15 years to figure out if there's any problems. And then once it comes to your awareness, you have another 2 years to sue the developer. To sue the seller, okay? You must review title of the property. The title of the property shows you who the owner is, what they do. It shows you charges on the title. And there's certain charges that are on the title that should not carry over. And one of the things we have done is, like, I'm not a lawyer, and any realtor you deal with, they will tell you, listen, I'm not a lawyer. Take the title, here's the copy, take it to a lawyer and get it reviewed. And when you do that, the lawyer will charge you about $300 to $500. And to avoid this cost for you, what we have done is kind of made an agreement with a lawyer where they will review the whole title, review each charge and explain each charge, what each charges are on the title, and give us the summary so I can read through it in normal English and not legal English, and kind of understand what is happening with that title. If there's any concerns, then we bring it up to a lawyer and they explain it that, look, this could be a problem, right? And there's charges on the title that could adversely affect the value of your property. So you have to make sure that there's not those charges on the title that could affect the value in the future. So you have to be careful of this. Insurance. If you're buying strata, there's in 2019, we had problems with insurance where a lot of buildings weren't getting insured because they had leaky condo or many problems that weren't dealt with. So the insurance companies said, listen, we're not going to insure you. And what happens in between is you have made an offer, they had an AGM, and they decided not to get insurance. They were declined insurance, and now you're trying to complete at completion. You won't be able to. So you have to make sure that you get proper advice on insurance, and we have amazing insurance brokers who can help you with that too. Strata docs. You have to learn how to analyze and read the strata docs. In my 25 years of experience, I have read through good ones, bad ones. I have been on 5 different strata councils. I serve actually about in 2 councils right now, trying to get into my 3rd one and 4th one. And the purpose for that is because I want to take control of my investment. There's 7 owners who sit on the council with the property manager, decide the fate of the building. And when we sell you a place, we recommend that you take part in strata councils. And when you gain that experience, you learn how these guys will write their strata docs and report the minutes to you as a public. And when I read through some of these strata docs, I know exactly what to ask because I've been on the other end as a strata member. And I've read through so many strata documents. I know of so many buildings in Burnaby, New West, and Surrey and Langley, where I can tell you, okay, this building stay away from because they have problems, they have issues, right? So it's really important to study strata docs and know exactly what to look for because it'll be like 200-300 pages that'll come to you. And it takes me 15 minutes to kind of look through it and look through the important things and then give you a summary of what the strata docs consist of. And if it is a good building, we should move forward with. So let's say we are doing this. We make an offer on November 20th. And we tell the seller, Mr. Seller, we'll buy your property at that price, this date, subject to all these things. But I need time. I need time to do my due diligence. Give me until November 27th. So November 20th to November 27th. So on the night of November 20th, let's say we sign the documents, we hand in the offer, the seller signs, accepts everything. And now on the 21st, another buyer comes and says, oh, I love this property. I'll pay Mr. Seller, I'll pay you $900,000 for this property. Because the seller signed the contract on November 20th, they cannot entertain any other offers until you tell them, look, I'm not going ahead with this property, which means the seller has to wait. And what happens is, and please take a note of this, what happens is if I show you that something is priced extremely well, and when we suggest, do you know what, make an offer and put it in that due diligence period. Because the next day, if somebody makes an offer and you didn't, you wanted to sleep on it, then the seller can accept that offer and it may create multiple offers. So you just have to be careful. If you like something, make an offer and tie the property up at that time, okay? The way it works is when you make an offer also, make sure you're not paying any deposit upfront. When we write our contracts, the way we write it is we say in our contract that the deposit is due after you remove subjects. So what happens when is subject removal? So on November 27th, let's say we have done all of this. Shane has come back and said, financing will be fine. Inspector has come in and said, hey, this property is perfect. There's not much problems. All these documents show that everything's fine with the building. At that point, we sign a document saying that we are removing all these conditions. We're moving forward. And at that time, right here, you pay the deposit. And the deposit is usually about 3 to 5% of the purchase price. And that is part of your down payment. So for example, if your down payment is 100,000, the deposit might be 30, and that gets forwarded to the lawyer. And at completion, the lawyer will say, well, you've put only 30,000 down. The remainder is 70 plus all the cost I went over with you guys, right? So on the day of 27th, you either remove subjects or don't. If you don't remove subjects and you say, well, the inspection came out really bad or the strata docs are not good, we back out and then we start the tour again. And then we make an offer again. And then we go through this due diligence period. But let's say you like the place and you want to move forward, then you remove subjects, pay the deposit, and now you're moving forward. At this point, you cannot back out. Otherwise, you lose your deposit and there's chances the seller may sue you if they have to sell it for lower, right? After you remove subjects, there's things to do. Yeah, you have to pick a notary public or a lawyer to complete your deal. We have a whole bunch of lawyers and notary publics that we have relationships with, so we can refer you some. You can search for them yourself. You have to inform TELUS or Shaw for your internet and TV, BC Hydro that you're moving in and you're the new owner. You must have the insurance, guys. If you are completing on, let's say the completion date is December 28th, for example. On paper, that's when you become the owner. Yes, you get the keys on 31st, but on 28th, you are the owner on paper, because between 28th and 31st, if something happens like a fire or a flood, your insurance is going to take care of that. So it's really important that you take care of your insurance at that point for completion date. Inform forwarders, book movers in advance because they get booked up real fast. If you leave it for last minute, you won't get anyone. When you are making a deposit and you're working with a realtor, the way deposits work is you write the deposit to Royal LePage in Trust. So you make the draft to our brokerage. Our brokerage forwards that draft plus all the paperwork that a lawyer requires to do your completion. The mortgage advisor will do the same thing, forward your commitment letter and mortgage instructions to your lawyer. The seller's lawyer will do the same thing. They will forward all the documents to your lawyer. And now your lawyer has everything that they need. So this would not be open. So your lawyer will call you on like 23rd and say that, you know what, come in and sign off on all the paperwork. And what they'll do is they'll keep that paperwork for completion date because you've signed everything. On the 28th, you do not have to go to the lawyer to do anything special. The lawyer will sign off on all the process, all the paperwork that you have signed on, and they will make you the owner on paper and give you a title registration number, which confirms that you have become the owner officially, right? And then on 31st, for example, you get the keys. Now, here's what you have to be prepared for when you meet the lawyer, okay? When you meet the lawyer, you have to bring a draft for the remainder of the 75,000 of your down payment. So 100,000 minus the 75, plus the $2,000 legal fees, plus the prorated tax, plus the prorated strata fees, plus registration of title, plus ordering of documents. And in the other sheet, I showed you what all this plus works out to. And CMHC fee and GST, you don't have to worry about bringing that amount in because that gets included in your mortgage. So physically, you don't have to come up with that money, all right? You don't have to have that money. It will get added to your mortgage. So I know this was a lot of information. Any questions on the buying process? You can unmute and ask questions, please.
My question is, how do you ensure you're not paying too much for a house or the house is over?
Okay, so the question is, how can you make sure that you're not paying too much for the house? That's a great question. And at the time of offer, we do this. We sit with you and we look at the numbers and we show you, okay, this home is priced way too high. And I'll show you an example in a bit in terms of price, okay? And this is what we like doing for our clients when we work with you. This is what we show you. Another question is CMHC fee mandatory? Yes, it is. The banks get charged and they transfer that charge to you, so you have to pay. If you are putting less than 20% down, you must pay CMHC fee, unfortunately, right? Will you share the Word document? Yeah, I can share the Word document with you. Somebody has done a really good job of the flow chart, which I got a little bit later, so I didn't get a chance to look at it, but I'll share that with you, all right? Anything you pay at the time of offer, great question. You should not have to pay anything at the time of the offer. The key here, the key getaway here is that make an offer and get a price and a date agreed. And in this market, the way I work is, if I show you so many properties, we try to create multiple offers for buyers. And there's a way of doing that in this market. And with that 25 years of experience, I do that for you guys when I work with you. Sorry, we have a few hand raises. Mitesh, go ahead.
Oh, I had that question earlier,
Okay.
but I had a question on the mortgage. So not sure if I can ask right now.
Yeah, Shane will get to this in a bit, and we'll go
Okay.
over this with you. All right.
Thanks.
Yeah, and Roger, do you have any questions? You can unmute yourself, Roger, if you want. Okay. And then the other questions, I guess I've answered.
Hi, Ravi.
Hey, Roger. Yeah.
Yeah, sorry, I'm driving right now.
Hey, no worries. No worries.
Yeah, just keep in touch, please. And
100%.
yeah, thank you.
Do you know what, guys? I'll call you guys and I'll offer you guys a buyer consultation meeting where I'll meet with you and assess your personal needs now, and kind of do up a game plan for you moving forward, showing you what you should be doing, how you should be looking at things, because it's really important to understand based on your specific needs now what to do. This is great because you get lots of questions answered as a group. There's some questions that Roger and Mia and Mitesh thought of that you might not have, and all your questions get answered, and together you learn more. But I want to do this one-on-one with you guys as well. All right. So I'll be calling you soon. Now, if a house is not listed online, but the homeowner is ready to sell, what is the best way to look for? See, like for example, as a realtor, I cold call a lot, and we get a lot of people saying, hey, we will sell our home if we get this price. So there's that way of getting lots of listings that are not on the market. And then the chats that I'm on with other realtors, because we post things on these forums. And then we try to see if we can find a buyer right away, because a lot of people love off-market deals. And if they can get a good deal off-market, why compete with people who are on market? So that's how we find these kind of deals for you. And recently we found a 2-bedroom, 2-bath for a client. It's 820 square feet with 250 square foot of balcony in Cloverdale, right where the future SkyTrain is going to come, about 2 blocks away. It was listed at 620. We got it for 560, 80 grand less than asking. And they're completing soon. And those are the kind of deals we'll try to find you that may not be on the market, right? So just I'll be reaching out to you guys, and at that time we'll book an appointment and we'll sit with you. And there's no cost to this. There's no cost to sitting with us and talking to us, right? Do you offer your services someone looking in Abbotsford? Of course. We have gone up to Chilliwack. We have a couple of clients who are really good clients who have bought in Chilliwack. And yeah, so we offer down there as well. Do you provide consultations only in Alberta or BC properties? Yeah, we cover BC properties. We're looking at some pre-sales in Alberta, but what we're finding is there's going to be a lot of inventory coming in, and a lot of investors are buying from BC and Ontario. So I think there's going to be a flood of inventory that'll come in. And if you look at their inward migration and outward migration, they're not having as much growth as Ontario and BC is having, but they're building a lot. So, and we have property realtor partners who deal across Canada. So even if you want to buy Toronto, Montreal, we have some amazing realtors who work like us, who will give you always information, knowledge, and guide you. Okay. I'm a Canadian PR, have a property in US. Can I be considered as a first-time buyer? If not, my wife is a new immigrant. Can she take advantage of the first-time buyer? So when you buy a property, there's like a list of rules that the government says that makes you a first-time buyer. In your case, if you have a property, I don't think you would qualify for first-time home buyer. I don't think so. But it's only for first-time buyers. And if my wife is a new immigrant, can she take advantage? Definitely. You can do this in a way where we can set it up so your wife is a larger owner of the property, and we can suggest some of the things and strategies how you should structure your deals, right? As a first-time buyer. The other thing is, if you are buying and you have, let's say, a couple who has 35,000 each, and you have RRSP rooms, you can put that money into your RRSPs and withdraw them after 3 months, and use that towards your down payment. The benefit you get is yes, you have to pay that loan to your RRSPs in 15 years after 2 years of kind of settling in with your mortgage, but you get a lot of tax money back when you file your taxes. And then because you're a first-time buyer, there's grants that are available for first-time buyers that you can apply for and get money back for that, right? So we'll go over that with you as well when we do a one-on-one consultation. Do we do consultation remote? It works better if I sit with you and I do this one-on-one, like in my office, because I like writing things down, pulling things up, and showing you a lot of things that I have available in my office. And it's better if we do it one-on-one. So we recommend just come into our office, and then we can do this consultation. All right. So okay, so moving on. If you don't have any questions about this, I will stop sharing this. And the next part is mortgage, the big topic of the day. So let's, so here we go. I know we're going to have a lot of questions about mortgage, and today I have the privilege of having my good friend and a business partner who I refer a lot of business to because of the way he works and the way he treats his clients. I have Shane McKay here from TD Bank. He's a mortgage advisor and one of the best that in this mortgage industry. Any questions that you have, I'm pretty sure he can answer it, and kind of apply the same system to guide and educate you. All right. So don't feel, do not hesitate, ask your questions. But what I'll do is I'll start with some of my questions I have for Shane, and hopefully these questions helps you guys understand the mortgage industry. So Shane, I want to welcome you.
Thank you. Thank you.
Thanks so much for taking time tonight and taking part in this. Tonight, I think people will have questions about how much do I qualify for if I put so much money down, and what's the process like? What do I have to do in order to qualify for a mortgage? Like, what are the pre-qualification steps I have to do?
Yeah, I mean, similar to you, Ravi, I'd always sit down with my clients just to get a better understanding of their financial situation.
Yeah.
You know, understanding their employment, their income, their down payment, where they're at. You know, if they're not ready at this particular time, then working with them to set them up for success in the future.
Yes.
So yes, very similar to you. It's, you know, it's meeting the client, you know, having a good discussion, consultation, etc.
Okay. Okay. And what are some of the documents like a person needs to know how much they pre-qualify for?
Yeah, so, you know, I definitely recommend doing a pre-approval, and I know as a realtor, you know, you would recommend that as well. You want to know how much you qualify for before you start pulling the trigger on making offers. You know, for pre-approval, I'm always going to keep it as simple as possible. Of course, I'm going to want to get some documents to support the income. You know, that's usually a current pay stub. We also want to get an annual document, so that might be the T4 or a notice of assessment, because that's what really the lenders are looking for. They're looking for, do you have a history of making this income, and are you able to show that it's current and ongoing?
Okay.
So those are really the basic ones in terms of income, up just for a pre-approval.
Yeah.
Again, pay stub, and then an annual document being the T4 or the notice of assessment.
Okay, so some documents to just kind of pre-qualify.
Yeah. What I would say is, if you get bonuses, performance bonuses, if you're getting lots of overtime, then the bank always wants to see a 2-year average. So in that case, I'd be asking for the last 2 years of your T4s or notices of assessment.
Okay.
But if it's straight salary, then 1 year is fine.
Okay. Okay. And okay, so pre-approval is where you look at my income, my debt, and you say, well, this is how much you qualify for. So pre-approval is that. How does pre-approval compare to approval? What are the differences between pre-approval and approval?
One of the big ones would be the property. So a lot of people forget when they're coming for the mortgage, they think the bank is only qualifying them, the applicant, and that's not the case. They have to qualify the applicant and the property that the person is buying. So again, I would be getting all the documents, doing a credit check, validating down payment. But once you have that accepted offer, I'd also be ordering the property appraisal, and the bank's looking at that. They're looking at the title search. You know, you were saying that a lawyer or a solicitor would be looking at that. Well, same thing, you know, during the mortgage process, we're looking at that to see if there's anything that should not be on title or if there's any concern.
Perfect. Perfect. So keep in mind, guys, here's an extra layer of protection for you. As a realtor, I may say, hey, this is a good property, this is a good price, but here's a bank that will do their due diligence, read through some of the strata docs, read through the title, look at the property value. They'll have their own appraisers go in, check if you're paying too much, and you'll know you're paying too much if you are. And at that point, you can say, hey, I'm not removing subjects, right? So this is really important for you guys to understand that whenever you are buying a place, have somebody do all this before you remove subjects. Okay.
I guess it's important to say you should be putting subjects.
Yes.
In the height of the market, a lot of people are going in subject free, and it's
Correct.
understandable because there was a lot of demand.
Yes.
But really, you want to have subjects in there because, again, if the bank does an appraisal and it appraises at less, but you've put in a higher
Bid.
offer or bid, you're going to be on the hook for that difference.
That's
right.
right.
So that's why you want the subjects so that you have an out if you need it.
That's right. So let me ask you this. What is the difference between you and a mortgage broker? Like a mortgage broker claims that they work with hundreds of different lenders, and so why would a person should come to you compared to a mortgage broker?
Yeah, a good question. And I was a licensed mortgage broker as well. And, I have a lot of friends in the industry, so I'm not going to, say anything negative. But there is some things I definitely that need to be highlighted. Mortgage brokers will say that they'll shop your application around, that they have access to all these lenders. But truth be told, there's only two big Canadian banks that participate in the mortgage broker channel, TD and Scotiabank.
Yeah.
So, CIBC, Bank of Montreal, they will not ever see that application. So you're thinking by going to a mortgage broker that all these big banks are going to see your application. It's not true. There's only two big banks. Yes, there is a lot of lenders, but they're what we refer to as non-bank lenders, monoline lenders, probably a lot of lenders that you've never heard of.
Yeah.
Worth noting, and a lot of people don't know this, including real estate agents. In the mortgage broker channel, if the property is deemed to be an investment property, a rental property, the rates are higher.
Yes.
A lot of times by 0.25% higher.
Yeah.
In my channel, that's not the case.
Yeah.
So if a customer is coming to me and it's whether it be a primary residence or a rental, I'm getting them the same rate.
Yeah.
So again, that's not something a mortgage broker will ever tell you.
Okay.
So if it's a rental property, you definitely want to be coming to someone like yourself.
Yeah. And do you know what, guys? Like personally, like you did my mortgages, a couple of them, right?
Yeah.
And I have gone to Shane, and he's managed to give me amazing rates and just structure my deals in a way where it made sense, right? So you want someone who is smart in presenting your application to that underwriter who is qualifying for a mortgage, because if that part is done wrong, your mortgage may not get approved.
Yeah, I can't stress that enough.
Yeah.
It's the mortgage representative who's telling the client's story to the lender.
Yeah.
And if you have the wrong person, for sure, and they don't tell the right story, or they present it in the wrong way,
Yeah.
There's going to be hiccups, pushbacks from the lender. So you definitely want to be working with the right individuals.
That's right. And the banks also have mortgage products for newcomers. If you are, let's say, a person who is in healthcare, like you're a pharmacist or a dentist, they will consider certain ways of qualifying you for more money, right? So you always want to tap into a knowledgeable mortgage advisor. A mortgage broker, a mortgage rep, a mortgage advisor doesn't mean much as long as the person who you're dealing with has knowledge, knows how to structure deals, and can give you amazing advice like Shane, right? The other question we have here from Mia is, if my household income is, let's say, about 120, what is the average mortgage I would get approved for with today's rate?
Yeah, so I mean, this is not a hard written rule. I mean, you won't find this anywhere. Before all of the rate increases, so prior to March of this year, people were qualifying for roughly 5 times their salary, and I'm talking about gross income before taxes are removed. So if you took that, if a person made 100,000, they were qualifying for about 500,000 mortgage. You add your down payment onto that, and that's your potential purchase price. Because of all the rate increases by Bank of Canada, I would say now it's more around you qualify for about 4 to 4.5 4.5 times your salary. Again, keeping in mind it depends on the rate, because there is the qualifying rate as well, which is 2% above the contract rate. It also depends on your amortization. If you're taking a 30-year amortization, you're going to qualify for more because it brings down the payment.
And okay, so we'll answer some questions like where people have their hands up. Mitesh, what's your question?
So, hi, so Sean, my question is, I'm a full-time employee, and plus I also have my incorporation, and my incorporation is like a year and a half old. So I was not sure should I withdraw, and I haven't withdrawn, the payments out of my incorporation. So I'm targeting like a 20% down, and I'm looking at 800 to 900,000 properties. So looking at that, I was not sure, should I go with the dividend or should I take a loan out of my incorporation, or maybe, take out my salary slips, though I have a full-time salary slips, but should I pay myself? So how will the bank decide that what's the best route for me to get applicable for the good amount of mortgage?
Right. And yeah, I mean, obviously for the employment, your salary, that's the easy part, the T4s, the pay stub, etc. But when it comes to self-employed, yeah, it's different. In general, the banks are looking for a 2-year average of your self-employed income, but most specifically, they're looking at what you're taking out as your take-home pay. And so this is, a discussion I have quite a bit with self-employed individuals, because, the purpose of the incorporation is, to lessen your taxes. So a lot of people who are incorporated, they're trying to keep the money within the retained earnings, which is great, but it doesn't help the lending aspect. Again, from the lending perspective, we're looking at, the dividends that you're taking out, or, the salary that you're drawing. And again, they're looking at the 2-year average. So from a lending perspective, if you're trying to set yourself up for success, I would say pull more money out and show, yes, it means you're going to pay taxes on that income, but pay more or take more money out of your corporation. And, the logic behind that is, from a banking or a lending perspective, is it's the take-home pay, or the money that you're pulling from the corp, that's going to be servicing all of this debt. So just to be able to say, well, I've got all this money in retained earnings or in the corporation, unfortunately, that, it doesn't satisfy the bank's need to know that you have this continual income that you're pulling to, again, service the debt.
And Mitesh, we have actually, like, I've learned of something just recently where you can take some money out from your corp, and it's a strategy you can apply to take money out and buy properties. So I can go over that with you when I call you.
And I would also, that it comes down to the pre-approval, right? If you're unsure, well, then, get in contact with me. I do a pre-approval, and I'll get your documents, and I'd be able to tell you exactly what you qualify for. And if it's not the amount you're looking for, then I would give you, guidance on what you should be doing to get to the next level.
Perfect.
Sure, that will definitely help. A quick question on that pre-approval. So a credit is still pulled, right, at the time of pre-approval?
Correct.
It still gets hit, right? Okay.
Correct. I mean,
Thank you.
There's no cost for the pre-approval. That's important to point out. But yes, there is a credit hit. Is that a negative thing? I would say no. What the lenders are looking for, if you're going to multiple lenders for a pre-approval, so there's multiple hits on your credit bureau, well, then that looks like you're seeking credit. So that can have a negative effect. And of course, if there's multiple hits in a short amount of time, yes, that will bring down your score a little bit. But, one pre-approval here or there, it's not really going to have that negative effect that you might be thinking of. And, again, your score will go back over time.
Got it. Thank you.
Yeah.
Excellent. Roger, let's hear your question. So unmute yourself, Roger, and then.
Oh yes, hi.
Hey.
Hi, Roger.
Oh no, I did
You
I
answered?
press? No, I was just listening. I did not press anything.
Okay.
Sorry about that.
Well, and actually, I will speak to, I think, a question that Roger had posed earlier, because he was asking you if, I think he was saying if I had 270,000 mortgage, 5% down, you explain the cost. But one thing I want to point out is if you're putting down less than 20%, that mortgage has to be insured, which is Ravi's spoken to. But you have to keep in mind that that mortgage application now has to be approved and viewed and approved by not only the bank, but the insurer as well. And one of the requirements by the insurer is to show that you have those closing costs that Ravi highlighted and explained. You actually have to show that you have that money set aside beyond your down payment to cover all those closing costs. And what the CMHC or the insurer does is they want 1.5% of the purchase price for you to be able to show that you have that amount set aside from your down payment to close to close on the property.
Awesome.
So it's not a cost, but you have to show that you have that money to cover those the closing costs that you referenced.
So we have Tamanna here. Tamanna?
Thank you. Shen, can you please tell me how the stress rate is calculated?
The stress test?
Stress rate?
It's, it's you add 2% to the contract rate. And so
The fixed rate.
no, whatever rate you're given, it's 2% higher.
On top.
So right now, I'm just ballparking, fixed in, like say a 5-year fixed and a 5-year variable are around 5.5%. You add 2% to that, so it means you're qualifying off of 7.5%. So they would calculate, if you're asking for, I don't know, 500,000 mortgage, they would calculate what the monthly payment is, again, on that higher rate, that 7.5%, and then they would see where your ratios fit.
Okay.
So again, it's 2% above the current qualifying rate. I mean, the way it's worded is it's either the Bank of Canada qualifying rate or 2% on top of the contract rate, whatever's higher. The Bank of Canada rate right now is 5.25. So because the rates are higher, they're always taking that the higher rate, which is 2% off of the contract rate.
Perfect. Thanks, Tamanna.
Thank you.
I hope I'm pronouncing your name right. Chivere?
It's Chikwere.
Chikwere. Sorry.
no worries,
Sorry.
no worries. That's fine. Yeah. So I'm just trying to look at this whole mortgage thing from like the would I say like the savings perspective. Like as you mentioned earlier, he said about like having that, is it 1.5% set aside?
Correct.
So I was just thinking, like, if you're getting like a mortgage, or I don't know, you get approved for 500,000, and let's say you have like a down payment of around like 25,000. How much ideally do you think that someone has to have like in their accounts? Because I mean, you don't want unexpected, like closing costs and like extra fees and stuff, right? So you want to make sure you have like more than enough. The reason why I'm asking is that at what point does someone know, okay, do you know what? I have this down payment set aside. I want to know that I am ready to go in to get a house. Like, without like, especially if you're very risk averse. So just kind of giving an idea. So.
Yeah, I mean, again, 1.5% of the purchase price is what the lenders want. But if you want an exact number, then you would speak to someone like myself or Ravi, and we would go through individuals. So what is property transfer tax? Is there GST? Obviously not if it's a resale, but we would work through all the different costs with you. But as a ballpark, you want 1.5% of the purchase price set aside beyond down payment, and that should cover. I would actually say 1.5% in most cases is on the higher side once we work out the numbers.
So if you look at this right here, this is how much you have to come up with in terms of closing costs, right?
Okay, 8,000.
Right there, 3,500. Because you're a first-time buyer, you're not incurring this cost, 8,000. The only concern is like you are paying CMHC fee. And the good thing is that CMHC gets added to your mortgage, right? So if you're buying something worth 500,000, 25 down, now the mortgage amount comes up to 475 plus the 20,000 CMHC fee, and that's where your mortgage amount comes up to 495. And what we do is per client, we assess this situation for you, and then we recommend a game plan for you. And we recommend a game plan in terms of, okay, how do we upgrade from a condo to a townhome to a house in next 10 years, if that's your plan, or from a townhome to a house. So we would sit with you, assess everything, and then kind of come up with a game plan for you. Right?
Sorry, that 5%, is it from the 495,000 or
No, from
the
500.
475?
From 500.
Oh, for 500. Okay, makes sense.
Yeah.
Makes sense.
And then, so you need 25 grand plus another 3550. So 3,600 you need in order to basically close on this deal if you were just putting 5% down, right?
So
once you put these numbers in, like if you put 800,000, right? And this is 70,000. So here we go. Like this would not apply then. All this doesn't apply. So this is your closing cost now, right? So you have to take into account all your costs and then move forward with your purchase. All right. So there's a couple of more questions, right?
Yeah.
Okay. So we'll end this soon. If you have a car loan, how can you still qualify for a mortgage? Hire a car loan.
Yeah, again, you know, that's the.
Yeah.
Sorry, go ahead. The point of doing a pre-approval. I have a lot of clients that come to me and they say, "Hey, Shane, I've got a huge car payment. You know, should I go pay off that car loan before I apply for a mortgage?" And I'll do a pre-approval, and it actually turns out that car payment doesn't have that much of an effect. So in some cases, I've said, no, you know, keep that money, you know, set aside for maybe another investment. So that's the point of doing the pre-approval to see where it's at. I wouldn't say just because it's a crazy, you know, car loan payment that is going to stop you in your tracks. I'd have to see the numbers.
Yeah. So every situation is different, and a mortgage professional, what they do is they look at your situation and then they give you an advice on what to do, how to structure things properly. Vamsi.
Yeah, hi. Thanks, Ravi. So,
Hey.
hi, Shane. Like, my
Hi.
question is like, I've been in a full-time job, in 10 years, especially last 4 years in Canada. And recently, like, couple of months back, like 3 months back, I moved to an incorporation. Like, I had my own BC incorporation setup, and I moved to an hourly paid job, which has indirectly increased my salary. But like, will I be eligible for the housing loan? My wife is still on a full-time job, but how my income will be calculated to support her application? So my questions are like whether all my income will be considered, or I need to wait for 2 years, or at least my last 2 years T4 will be considered, because I have moved into the same profession, like I'm an IT engineer, and
Right.
like I'm still with IT and moved in the same profession, but with the incorporation and hourly paid job.
So I'm just trying to figure out if you're self-employed or not. It sounds like, are you on a
Yes.
contract?
No, right now I'm self-employed. Like
Right.
I have like contract for 1 year right now, and like it will be extended before that. It's like an hourly paid job.
Right. Yeah. So, you know, again, we'd be looking at that 2-year average. If you did not have the 2-year average, then I
No,
would be asking for
let me tell you at high level, like my last 2 years average will be around 85K, and like my current 1 year contract will be around 150K. My question is at least the last 2 years, but right now, if you ask me the job, I have resigned the job in August. So I have my pay slips until August for that 80,000 average salary. So at least like for my mortgage application, that 80,000 will be still qualified.
based on the way you've explained it. Yes.
Okay, sure.
Yeah. Okay, so collateral charge. Devin had a question about collateral charge on a mortgage. What is that?
Yeah. So there's a question here. It says, I was told TD has a collateral charge on a mortgage. What are the positives and negatives of having a collateral charge? And so this comes up time and time again, and sometimes people will portray it in a negative light. I actually think it is something positive. So a collateral charge means it's a re-advanceable loan. You can come back to the lender, and the lender can lend up to that collateral charge. They can re-lend up to that collateral charge. Yes, you do have to qualify. You have to employment qualify. But I actually helped Ravi with this as well. So there's the mortgage amount, and then there's the registered charge amount or the collateral amount. If you think you're going to come back at a later point in time and you want to pull out equity out of that property, when I'm doing the mortgage, I can actually put the collateral charge at a larger amount. So just as an example, a simple example, your mortgage is 500,000. I could put that collateral charge at, say, 750, 800,000. In future, you could come back to TD and you could say, listen, I want to refinance. I want to take money out of this property. I want to take money so that I can go buy an investment property. Because of that larger collateral charge, there'll be no additional legal fee. So you're actually saving yourself money.
Yeah.
Yes, there would be an appraisal fee cost, I should say, of the 300, but that larger collateral charge allows you to come back and save on the legal fee because TD would already have the larger collateral charge registered on the property. So in my opinion, it's actually a positive thing.
Yeah. So so great questions. Just think how much we learned from all of you asking so many questions. Like, it's amazing. For people who own corporation and pay themselves, like I'm doing the same thing as you guys are. So you have any questions, let me know. There's ways, there's products out there that you can use to shift money from your corporation and borrow it from this product and then use it when you buy a place. So and not pay taxes. So it's a legit product. I would love to sit with you guys and go over my buyer consultation meeting with you, where we do this more in depth based on just your specific needs. Now, when we sit with you, also we design a game plan. Like I have multiple properties now. I've set them up. I've made mistakes where I've bought them under personal name. And now I'm structuring it. I've structured it in a way where any property I buy under corporation. And I would show you like how to do all these things and assess your needs and help you come up with a 10-year plan. We have clients who are in this 10-year plan. They bought properties in 2015, 2017, 2018, and they're laughing because they have borrowed money from the equity, like Shane explained, and bought their next property, and they're buying another property and another property and accumulated up to 4 or 5 properties, right? And this should be your retirement vehicle, because in next 10 years, you don't know what's coming. With a recession follows the growth part of the economic cycle. And when that growth part comes, it's going to be tremendous, especially in BC and Ontario because of inward migration. And this is where you will gain financially and create wealth for yourself. And we sit with you. I'm doing this for my own retirement plan. One of the properties I have as my son's RESP, and we will borrow money to get his education done, and we'll pay it off once he's done his education through the equity of this property, right? So we would set things up for you in a way where we're not looking at just that one purchase, but we're coming up with a game plan for next 10 years. And then you decide what works for you. You may say, hey, one property is enough. Okay, that's fine. But here's a game plan for you. Here's a plan of action like you can take. And we keep in touch with you and follow up with you and sit with you to go over property value every year to make you understand what is happening in the market, right? So we don't treat this as a sale. We want to build that relationship with you where we're always in touch with you. And if you ever need any help, even like I have people calling me and saying, hey, I'm having problems with my property manager. Ravi, I'm having problems with the strata, or I have this problems with my home. I'm always there to help you, right? So the other thing is also look at our Google reviews, because you'll see that what people are saying about our services. And we don't treat you like a number, like a sale. It doesn't matter about the sale. What I want to do is make sure I show you that we're here to educate and guide you, and you will instruct us when you want to make an offer, when you want to buy something. Like you are hiring me as an employee, and you are the boss. So I will suggest things and then you decide what you want to do, right? I will share my website with you, Mitesh. I would say look into realtor.ca, which is a better website, unfortunately, because the way our website works is we have a system called Paragon, and that's more in-depth. And then the next best website is the realtor.ca website. So I would search on that. We are starting our own website soon. It's called startpropertysearch.com. So we're getting rights from Greater Vancouver and Fraser Valley Board, and it's going, we're not happy with the way our sites are created. And I have an IT guy full-time here in my office who's creating this website right from scratch based on my needs, based on the way I want my clients to look at properties. So that's coming soon, all right? Just one last thing I want to show you before I let you guys go. Somebody asked me about how do you assess if you're paying the right price? And I think this is really important to cover. This is my system, backend system as a realtor. I don't mind showing this to you when we sit down together to assess properties, right? I want to show you something I did here. Last search. So here's the sales. Here are the sales that happen in, so here's active sold listings between November 1st, 2021 at the peak of the market to December 31st for 2-bedroom, 2-bath, Central City, Wally, right? 800 to 900 square foot, 2-bedroom, 2-bath. How much are they selling for? So if I search this, it gives me a list of properties. These are sold properties. And then what I would do is I would show you this. I would show you what things are selling for, what things we're selling for in terms of price per square foot, how many days they took to sell at that time, right? What were things selling for in terms of price per square foot? And here's the average price per square foot. Here's the highest price per square foot, okay? Now, if I go back here, and I just changed this to to 2022, October, let's say November, sorry, today's date. And then I say, okay, I want to see everything that's sold in last 2 months from now till October, from October 1st till now. Same thing, in between this range, only 2 properties sold compared to how many? 55 properties, right? So it's showing me that not many things are selling. And in terms of price per square foot, 745 compared to whatever, 900, 845 something. So things have drastically come down. Now, if I were showing you properties, like, for example, these are the sold listings. let's put in active as well. 35 now altogether. And if I were to show you this sheet, I can tell you right away, and you can look at this right away and say, okay, a property like this at $900 per square foot is way too much. It's priced way too high. People lie, numbers don't. And numbers show here that this is way too high. So I would talk to this realtor and I would see how I could bring this property down in terms of value, right? But there's properties that are at $670 per square foot, $565 per square foot. So there was a question about, should I buy old, should I buy new? Well, if I can take a $565 property per square foot property, spend another $30, $40 per square foot and upgrade this to a nicer looking property, can I make money? And the question would be yes, right? But at the same time, I have to evaluate the building. I have to read the strata docs. I have to make sure that the building is well maintained. And that's only when I'll invest into this property. So when we sit with you and when you say, Ravi, okay, let's make an offer, I would look at this and I would say, okay, listen, this property is way too much. Like, let's try to bring them down, but let's see how much will they come down to, right? And that's what we do. We look at all these properties. We look at if this property is a good property, we will look at that and kind of determine the area. Is it in 108 and King George? Because that's not a good area right now. And it is changing. But do you want to be in that area for short term while it's changing and live in that area? So these are some of the questions we would kind of discuss together. I would give you my feedback. You would look at my system and say, Ravi, can you do this? Can you add that filter? And we would do that together, all right? So that's how we determine if you should go with old or should you go with new. The other thing is, how do you determine market value? This is exactly how you look at how much things are selling for, and you look at how much current listings are selling at. And then you determine what you want to pay, because the bank will look at this too. And if you're paying too much, guess what? Your appraisal will not come through. And now you won't get the mortgage that you want. All right. Just one question. First-time buyer incentives, is it still being offered? Government pays. So the government program where they pay a certain percentage for your down payment, I don't think it's the best program because they want a certain percentage of your gains as well when you sell. So would I take on that program? What do you think?
Well, I think the question is it still being offered? I'm 99% sure the answer is yes, it is still available, but from a professional standpoint, would I use it? No. You know, some people have come to me thinking it's free money. It's not free money. Yeah, I can tell you that you have to pay it back. And as Ravi alluded to, you know, even when you sell it, if you sell that property at a gain, the government wants a percentage of that gain, right? Yeah. So why should you pass on that gain? Like I would take the hit on the CMHC fee, then passing on any gains to anyone else because they were participating in my purchase, right? So guys, I would highly recommend if you are buying, I hope you liked our presentation. This is how we work. When we work together, you'll see we go even in depth on many topics that we could not cover today. And we would always educate and guide you. We're not here to treat you as a number. We're here to build relationship with you. And hopefully you like our service and you refer us to friends and family. And that's what we would ask for. I will call you guys personally and invite you to our buyer consultation meeting, which consists of the buyer questionnaire now. And I want to understand your needs better. I want to understand your situation. And then based on that, we will come up with a 10-year game plan on how to proceed with real estate and how to look at and evaluate market. And I want to be that go-to real estate guy. Whenever you have questions, you can always feel free to pick up the phone, call me and say, hey, Ravi, I have a question for you, man. Like, what do I do with this or that, right? So
So with that, sorry we went a little bit over. You guys had lots of amazing questions. So I hope we answered them. If we did not, please give us a call. We are here to help you guys. And any questions you have, we'll hang around for a bit here. Fire away your questions. We would love to answer them, but do expect a call from me. And I truly want to help you guys get into the market and through guidance and education. All right. Thank you so much. We'll just wait about a minute for any questions people may have, but you guys can log off if you don't have any questions. Thank you. Thank you once again for attending. Thank you for your appreciation, guys. Appreciate it. Thanks. Thank you. Thanks, Roger. Thanks, everyone, for your feedback. I really appreciate it. Have a good night, guys. Any questions, give us a call. All right. Thank you. Bye.